Vincenzo's Gold Crypto Investing, and we are back at the Vincenzo compound, sitting in my recliner, watching my beautiful Samsung 65-inch crystal cleared 4K TV, smoking a little hashish and mutta. Oh, that's the good shit right there. Feels so nice. So nice to be back at the compound. And sorry that I haven't been able to answer comments and questions today. I've been traveling and working all day until literally just about right now. So my man commented, XRP Sniper. I don't know what your other name is. I can never remember, but I'm gonna call you XRP Sniper, my man. You're talking about maybe buying in some coins. I think when I was scrolling driving, it said something about Bitcoin 48,000 if that was the bottom. Well, obviously not now, as I think it kind of flash crashed earlier when I was driving, right? Yeah, it did. It was very active day to day in the crypto. Yeah, it came way down, and you can see. Let me zoom on out here, and this is the overall sentiment of the market right now. I've been telling you guys that when the Fed starts talking, the market starts listening, and risk assets don't like higher interest rates because that means the cheap money is going away. If you're going to borrow money, it's going to cost more, right? Risk assets don't like that. The tech sector, the EV market, the crypto, right? And they start to sell off. And as you can see, we were in that rising wedge right here. And this is what was telegraphing that eventually this was going to run out. Right when you got about here, you could kind of see support or resistance, support, resistance coming back down. You could kind of start to draw these lines out, right? And you got rejected up here at 50,000, and then you had a phenomenal, fabulous, gorgeous, glowing, stunning, all jabroni enticing double top, right? Up here, you actually peaked above it a little bit right there, but you got up to 67,000, 68,000, but we were telling you it was going to come down, and then when it came into this area right here, see that? Let's pull up my industry exclusive perching tool. You can see when it came into here, it traded down after the last pump way back there in the spring, then it crashed over several months, then traded sideways, formed your first upper resistance, then you traded down and sideways, hit some lower support from back there on a wick, and then further back in the prior pump, then you hit your first support on this rising channel as you have an uptrending support and an uptrending resistance, right? And then you trade it up over the course of the next few weeks. Trade it up over the course of the next few weeks. Oh, come on. What happened? That's what happened. You trade it up after the next few weeks from about the 16th of July, and then you hit upper resistance for the first time August 12th at about 48,721. Then you hit it again at 59,000 on July the 26th, and then you hit it again on not July the 26th, you hit it again on August 23rd, and then you hit it again on September 5th, and then you had a flash crash right here, a lot of panic in the market. But you know, we discussed that when we're in there, but this is why you always go from a far out time frame, because imagine if you're zoomed in here on the 4 hour or the hour, the 15-minute during this, it's going to look catastrophic, like it's never going to end, and you can get faked out. But if you're zoomed out to the 3 hour time frame up there, you see that, then you see this in perspective on what the move, the whole flush was, what the volume spike. You see this? You have this big pump right here from 29,948 all the way up to 42,702, and then you had a little dump, right? But you had a nice volume spike right there, and then a secondary double top in the volume, and then it crashed from the 5th of August all the way until the 6th of September. You had no volume and it was crashing, but look at the price from right here, and a very big up and sideways consolidation, right? And you can see there was never any structure. It was just piddling up, right? So it was telegraphing that you're going to get a dump, right? At least back here to your old resistance or your old support now from the pump, but it was telling you it was going to come down, and a logical spot would have been here. And we went over that if you watch videos from back there in September and August. We went over this extensively what was going on, and then we told you this was a critical support zone, and if it fell through here, you'd come down here quick. Instead, it had another big pump, but you notice the same thing happened right here. Just not as much volume. You had a nice pump right here, and you see the volume initially spiked, and then it declined, and then the pump right here looked awfully similar to this back here, right? So we told you this was going to get topped out after it rounded this and got supported. We told you this upper line would be the last and it would get topped out, and it came down to lower support again for the first, second, and now the third time. And you notice this time it flushed with the big price action, the big drop, and a huge volume spike, couple of candles there in the 3-hour time frame to confirm the breakout. Then it had a relief rally to trade back in to the moving averages, and we told you extensively, again, watch these videos out from here, we told you what likes to happen there when it does that, right? Shit, every time I do that, I don't know how to get out of it. But we showed you there how what it likes to do there, right? And let's get back into where we were at. We'll go into we were in the 2-hour, let's go to the hour this time. Hit that little auto button. And we showed you what happens. See how, that's why we start from the far out time frame. See how super simple and easy that is to manipulate this, to fleece heist and shiest, the fleece heisters and shysters as they manipulate the trading market and try to knock down the retail trader, right? But like we showed you what likes to happen here when you flush down like that, you get a relief rally and get bought back up a little bit like you see right here. And we went over extensively what likes to happen there. It trickles down and ends up coming down to double bottom. And that's where I think it's coming down to right now. And you're still staggering on this fib circle, but on the downside of it now, because this moving average is just beating it down. Since you've dipped below it right here, gets beat down, hits it, beat down, hits it, beat down, straddles it, beat down hard, beat down, beat down, beat down. You got to come down here like we've been talking about, or like I've been talking about since you had that wick. When you have them big wicks like that, that means there were buyers there, but that's just because there were buyers sitting at a technical level from back in the left of the chart at some point, right? So we knew this was going to have to trickle back down eventually, and it's going to be a classic descending triangle. It's a bearish continuation pattern, and this is coming back down here to retest. And if you can't hold that, you are indeed going to come down much lower. If you can't hold this $41,000 target, your next move is all the way down here to 29,000 in an up and down fashion. But we'll get into that when need be. If you want to get bullish out of this, you've got to get above that 200-day moving average in the 3 or 4 hour time frame. This is in the hour time frame. So in the 3 or 4 hour time frame, it's probably up there. You have to get above that with a nice big pump, then a good little down and sideways consolidation, and then a pump back up. That's the way you got to break out of that if you're trying to get bullish. Get a couple of the green candles down there in the hour and 2 hour time frame, and then have a descending volume when it's consolidating right here in the price, and then you get the volume to come back in, and then you can try to make a run at your major upper resistance. On any run would be way up here. Am I forecasting that? Absolutely not. Is it possible? Sure. Is it likely? No. Is it plausible? Nope. The more likely solution is you trade back down to the 41,987, and then we take a look at it once it meets its target down there, where I believe it is actually going down there. That is my call. Before you get up to that number, you're at least coming down there first, but we'll take it from there when it gets there, and then we'll evaluate the circumstances within the Bitcoin and the cryptocurrency and the overall economic sphere and the overall sentiment of the trading world to make an educated, probability-based trading decision, right? Oh yeah, that's the good stuff right there. That's why you always got to leave yourself a little snack at home when you go on long road trips, because you're going to consume all of your goodies while you're gone, and then you're going to come home and you're going to have nothing until the next day. So you have to pre-plan for that and put a little bit in the cabinet for when you get home. Now you can see what's going on here in the all famous XRP, as there's been very bearish sentiment, and you can see we're going to go out to the 2 hour time frame to start, center this picture a little bit, and you can see from right here with our, oh, that's not it, get out of that, with our pointer industry exclusive pointer perching tool, you can see this is where we had our world famous callback there in early October when we told you it would top out on that fib circle, and it did. Then it formed a descending triangle right here. I erased the pattern because there's too much clutter. And then it flash crashed down to 94 cents like we thought, right along that green fib circle, and then you got bought back up, and we told you it would top out up here no higher than that fib circle right there. And it was just an all, this was just a all jabroni enticing, fabulous, glowing, gorgeous double top to fleece, heist, and shice the jabronis, right? And that's why you're going to be, yes, members of Jabroni Killers. As soon as Jabroni Killers comes on live, as soon as we become monetized, after 85 beautiful, lovely people in the audience hit that subscribe button, right? And then we had upper resistance, lower support, and then it traded up, hit the moving averages, got rejected, lower support, then it traded up, hit the fib circle, got harshly rejected, all the way down. A big crash in the overall cryptocurrency market. We were forecasting that 72-cent target from way back here when the price was rising, and that was a 46.69% flush. Everybody thought it was coming up here. Vincenzo told you it was going down there. We didn't know how long it would take, but we knew the price was going from here, not up there, not back that high, but going way down there first, and it did. And it actually, or we said it was going to go to 72 cents right there, but the wick came all the way down to 57 cents, and we've been in this falling channel outside of that flash wick right here. And that's why I think we're going to head that back down there, just like the old Bitcoin, right? You have this big wick like that. Anytime you have big wicks, that's heavy sell pressure, and it gets bought back up because buyers were right there because it was a technical level. And then it likes to fizzle out now in a continuation pattern, and it slowly trades out and all the way back down. And all those people that bought in down here, as it pumps up here and it gets 30, 35, 40% real quick, they trade out in the here, right? The people that bought here, remember this, on the limit order in, they are limit ordering out up there. And everybody that bought in back here expecting this to have a huge pump that Vincenzo's Go Crypto Investing told you would not happen, they, when it flash crashed right there with that wick, they got liquidated because they all had limit orders under the price. And that flash wick, all in about an hour's time probably, took out all these people that bought up here. All these people that bought up there thinking it was going way up there, and they've been patient but getting beat down for the most part, because look where the price has been most of the time. They got liquidated right here because they have limit orders. They were probably down with our industry exclusive measuring tool. The average guy probably bought in up there, and by this point they were down 42%. And then in the middle of the flash crash, they were down 32.69%. So their limit orders were in, and they said, just get me out, I can't take the beating. And initially they looked smart, but it got bought back up immediately on the limit order, never got back into here. So these people, the early ones that sold, that seen it and had the tight stop loss, did all right. And then those same people that did sell into this and lost all that money from back here, they seen this big wick and thought the pump was on, and they bought in here. And these guys down here that bought in on the limit order are selling to them. They're selling back to them, right? And then it'll flash drop back down to here after all those guys that bought this first bounce are done selling, right? And then it's just gonna flash down, and then there might be some buyer stack there. But what I think is gonna happen, if there's buyer stack there, you bounce back up and you get rejected by this falling channel. Now this would be major upper resistance because you broke through it, and then I think you would get rejected and trade down to this blue 44-cent line, or all the way back down to what seems to be playing the most significance, these green fib circles, down to the 39-cent target. So in short term, your local support and resistance is 74 cents is your local support, and 85 cents in a descending fashion, both of these, is your upper resistance, right? And then your lower mid-ground lower support is 57 cents if you break the 74 cents, and then your mid-ground upper resistance, if you break the 85 cents, is 92 cents, right? So those are your four immediate targets. And then if you had a big pump, 115 would be as high as you would get. and then the ultimate midterm flush is 39 cents, where there would be a good amount of buyers there if you flash drop down to 39 cents, right? So that's what's going on in the Bitcoin and in the XRP. It was a travel day, so I'm not going to be able to get as many coins. I'm going to try to make one more video this evening before I go to bed for my subscriber with his altcoins. I'll try to get your altcoin update out here before I pass out. Peace and love, peace and love.